All right, cool, we're back. Yeah, I'm back with a fresh trim, and I'm about to show you the best entry model that no one is talking about. Okay, so I know there's a ton of different entry models. A lot of you guys, I think, will probably be struggling with the entry. Now, just one thing to say before I get in with this. The entry, in my opinion, is the least important part when it comes to the setup. The setup is built on daily bias, how you're formulating order flow, all that good stuff. The entry is just that cherry on top. Okay, now there's a lot of ways to go about the entry. There's a ton of different ways you can enter, whether it's total soup, whether it's CSD, market structure shift, all that good stuff. I'm actually going to show you an entry model that truly no one actually speaks about. I haven't seen anyone talk about this online. And in my opinion, it is probably the best entry model there is. I'm going to show you it on the whiteboard, and then we're going to do a little chart video as per usual. But yeah, I just wanted to say I appreciate all you guys really dropping sort of those comments down and telling me like, look, these content and these videos are actually helpful, right? Which I mean, that's the whole point of these videos. So I'm not gonna lead you guys on. I'm just gonna give it to you straight, right? So the entry model is the propulsion block. Okay, now let's write this out. We'll do it like this. So let's say price is coming into your higher time frame level, right? Right? Price is coming in. We drop lower. Let's say I don't want to give a specific time frame because I know some of you guys might enter on H4, H1, all that good stuff. So higher time frame level, price comes in. Now, I normally say, right, the entry down here that would be the smart money reversal. I normally say that's the worst entry. And the reason it is because you don't know how far we're actually going to dig into this level, higher time frame level. You don't know if we want to dig lower, okay, if we stop here, or you want to go a bit lower and come back higher. So it's difficult to time the bottom. However, when we get like that CSD, for example, or that market structure shift, okay, a lot of the time it can give us that confidence that we're after. So let's mark that on. So let's say you get this now. I say this is a swing high, and let's say this is a market structure shift. Now, this is good, okay? Don't get me wrong. There are times when, let's say, there's like a 15-minute CSD, a 15-minute market structure shift. It's good, right? However, if you're on the lower time frame, let's say like an M5, right? Let's just put an M5 right there. Playing the market structure shift or the CSD can sometimes be a little bit more problematic because of, like I said, trying to pinch the bottom of the move. So what you can do is you allow order flow to build, because if you actually really break it down, when you're trying to enter a trade, you really just want to get in once the order flow has been built on the other side of the move. So let's just say this is the draw, yeah? And I'm going to talk about this in terms of market maker model as well. Let's say we've had the market structure shift, okay? Price then comes down, it reacts off the FVG here. Sometimes price can really play around in this level as well, because it's sort of that first tag after a shift. Basically, once we get a push, the second leg higher is, in my opinion, the best move. So we get a closure above this high. Right, normally I do like a light bulb here. Basically, as soon as we get a closure above this swing high here, that's where, I'm going to change the color here. That's where you want to go ahead and enter. Okay, so let's say entry. SL will depend on what the setup looks like. It might be down here, might be at this swing low. But basically, here we'll have an order block for. And really and truly, we shouldn't really get past 50% of this order block here, right? This here is a propulsion block. And so when you go ahead, you enter like somewhere here, SL there, and then TP will be up here, pretty much. Okay, so let me just draw on. Okay, so essentially what it looks like is you're going to get the original CSD, right, which is that shift from sell side delivery, against as a bullish example, to buy side delivery. Okay, you're going to ignore the first entry and you're going to wait for another order block, or the order block that basically mitigates the CSD entry. You're going to wait for a closure above that high, and then you're going to enter there. Okay, so The reason why this is such a good entry model is one, because this could be, for example, a liquidity sweep to go lower, and so essentially you're going to end up getting wicked out. The beauty of this is like I said with the entry model, you want to see order flow build in your direction. The more order flow that's built up in your direction, the better chance you're going to have at getting in a good entry. And this again, if we think about it from the market maker buy model perspective, you're entering higher up, more in the stage of the first stage or second stage accumulation of the market maker model, which is again the best entry that you can essentially get into. Another thing is you'll be in closer proximity to the draw, which is a good thing as well. And the only, I guess, caveat to this is sometimes you're not always going to get this. But I mean, you're not always going to get a CSD or a market structure shift. So that's a given, right? But you're not always going to have the ability to be able to get in something like this. Sometimes it's just going to do a market structure shift and it's going to fly to entry. And that's something you have to become comfortable with and understand that, look, you're not going to get in every trade, you're not going to get in every entry. Sometimes you're going to get into the position where price goes ahead and runs off without you. Okay, so just to put a name on the entry model, it is a propulsion block style entry. If you don't know what a propulsion block is, right, if you've got this part and you think, what the hell is a propulsion block? It's an ICT term. It's basically an order block. To put it very, very, very simply, it's basically like the order block that comes in to mitigate the previous order block, essentially. Okay. So, for example, let's say this is an OB here. This one's going to be a propulsion block here, right? So when you go ahead and enter here, it's basically the fact, or it relies on the idea that price is now in a buy program. It's going to move higher, and you've already qualified the trade by understanding that order flow is being built. Okay, because again, if like I said, if you really break it down, what are you trying to do with the entry? It's you're trying to understand that shift from the sell side of the curve to the buy side, or vice versa. And with doing that, once you're waiting for the propulsion block, you actually eliminate a lot of the losses that will occur with getting in at the bottom, the low risk buy, and sort of just getting the entry wrong in a sense. Okay. So the other thing I will say, right, is this entry, typically you're going to have minimal drawdown, right? Like I said, the propulsion block really should be respected, and price shouldn't really get past 50%, even trade past 50%. So with the propulsion block, one, you could be quite aggressive with the stop, although I wouldn't say you should. But the other thing is that this is going to lead to a low resistance move. So like when you get into this trade, more time it's just going to run to target. Whereas when you enter in and around this level, sometimes it's going to be a bit slow. It's going to respect the level. It's going to be playing around in that level sometimes. Again, not all the time, but most of the time when you're going for the propulsion block entry, you're literally just going to get in and it's going to fly to your target. Okay, so let's go over to the chart. I'm going to show you an example that we called last week on Friday, I believe, New York session. And yeah, let's get into the chart.
This trade is basically built on the last or the previous video's higher time frame. So if you want all the context, all the top down behind it, I've covered it in that video. I don't want to go ahead and repeat myself for the guys who are sort of the active and loyal followers who are just watching all the videos, because it's just going to be a waste of your time. So anyway, previously we had an expansion during London, which led to a really nice move to the upside beneath Asia. Okay, and if we follow the idea of a classic expansion, if I just draw it out for you here, it's where we have Asia, right? This is a daily cycle. We have London, and then we have New York retrace, or pre-New York retrace, or first hour of New York retrace, and then we see New York expand. So basically, New York is continuing London's move, and that's what this idea was based off of. So this is also an idea that I called inside the Discord. I haven't set that up, so I'm not going to go and show that off. But anyway, on the hourly, we're in a buy program. We're on the daily and the 4 hour, also in a buy program. So we want to see higher highs continually being made. In terms of what we're anticipating price to actually do here, okay, we want to see price come into this hourly FEG, or that was the expectation. I wanted to see how we reacted inside of here, and then I wanted to see New York expand and create a new higher high. So let's actually play this out, and I'll show you exactly sort of what my thought processes were and how I went about tackling this. So let's play. So this is the 10 o'clock candle, so 10 to 11. So we're not in New York yet. So New York's about to print on the next candle. So you see here, we do close through the hourly FEG, but it's only slightly. So when it does this, you still have to be aware of the idea that the next hourly candle could just, again, pretty much just rocket. So what I'm basically looking for is I want to see what the lower time frame is doing, how we're setting up inside that level, and if we're quick to close back above this level and then start gravitating towards this high. So this high is basically the draw, right? If I just put a symbol there, again, we're looking for the hourly to continue. We're in a buy program. We want to see bullish arrays being respected. You could also say we're inside of this order block here, and we've just tapped 50%. So let's go ahead and investigate exactly what's going on here. And I'm going to show you an entry with regards to the propulsion block and how you could have went ahead and entered this. So we've tapped the hourly FEG. We've also tapped the 50-minute levels here. So we have a FEG here, and we've actually just shy of this one. So we're inside of another fair value gap. We have also swept out some liquidity. That's really key. And what you'll notice is I'm always looking for that sort of internal liquidity to get swept, because I want to understand, or I want to gauge the idea that smart money's got behind a move, and smart money has paired orders with that area and then looking to reverse price. And it also acts as a really good SL placement. So let's jump to the 5-minute now. I want a bit more detail on this. And yeah, you can see, so New York essentially consolidates. We're following that that classic expansion profile very nicely here. I'm actually just going to take the sessions off for a second just to keep the chart really minimal. So let's have a look. So you can see I actually mentioned this level, and I said in the Discord that I wanted to see this get inverted. Okay, that's sort of the first key level. Okay, so we're still just rocketing down at this point. We come into 1 o'clock, so that second hour of New York. Key thing here, right? So we get a CSD. Now this one, that would be the low risk buy. Okay, and now I always mention the fact that I don't like that bottom trade. That bottom trade for me isn't always the greatest one. Okay, it has its moments, especially when combined with SMT, it can be good. But that bottom entry, a lot of the time, you're going to have a couple issues with it. So anyway, let's see what happens here. And when I say bottom entry, right, it's more at the fact that this is so low down as well in the move that makes it not as nice, and also the fact that it's on a lower time frame. So for example, when we were analyzing this trade, this was different because we had the 15-minute, we had the CSD on a 15-minute chart. This is where we're really locating the bottom of the move on a 5. So there can be a difference. So we go ahead and form an FEG right here. And let's see what we do here. So with this bottom entry, I normally allow that one to play out first. Okay. Reason being is because this entry normally is quite slow. Okay, so look, you can see here, if you played this 1, 2, 3, 4, 5, what's that, 25 minutes, okay, sorry, even more, 30 minutes. So we actually consolidate inside of this FEG. Okay, I know there's quite a lot of PD arrays overlapping there. If I just delete these for a second, it'll probably be really clear. So we played around in that level for 30 minutes. Okay, now if you had just waited for the propulsion block to form and get a market structure shift above it, now you're in a different story. So the propulsion block is this candle here, this black one right here. After we filled that level, we get a propulsion block shift. Sorry, we get a market structure shift above the propulsion block. and then that entry would be the best possible entry you could have taken right there. Okay, with the SL, you have the trap liquidity. This makes more sense because this distance is a lot further. We've pretty much filled everything. I mean, you have tiny pocket of fair value there. It's not really that important. That liquidity would be the best SL possible in this case. Also, we're not waiting for an FEG. You can just essentially execute after the shift. And again, you can notice minimal drawdown. And we literally run to target within 15 minutes. And these are the trades you want to get behind. These are the best trades. These are the most ideal trades, are the ones that just run to target. And especially when you look at a propulsion block, you're going to be able to get behind that move a lot more. Okay, so I hope you guys can see the difference as well between the prior trade and this one, and how they differ. With this one, the displacement was a lot further up the leg, and also with the 15-minute confluence, it makes a bigger difference. But even with this one, I would have preferred a propulsion block entry, and that's actually why I didn't even get behind this one specifically. So this one, again, is mega clean here. The propulsion block entry is, again, no one really talks about it, and I think it's because people don't like the idea of not entering right at the bottom. Probably everyone's looking at this as sort of the better risk to reward trade, which is understandable, but I think you're not taking into account the mental capital of sitting through drawdown for 30 minutes, plus the idea that this CSD isn't always going to hold. Sometimes this is going to go ahead and run lower once or twice, and then go higher. That makes a huge difference. Whereas with this propulsion block, the win rate is going to be a lot higher, because basically order flow is already built in your direction. As long as you've got all the rest of the things right, this rarely ever fails. Okay, so anyways, hope you guys enjoyed that video, and I'll see you on the next one.